Welcome. My name is Mike, and I started with almost nothing 8 years ago, and I built a net worth of just under $800,000 in those same 8 years without saving my way to wealth. Many of you probably think that you need to make $500,000 a year or more to quickly build wealth. I'm here to show you this is not the case. Most of my adult life has been spent in the industry of cell phones, where I worked at AT&T for 5 years, and then real estate, where I have been for another 4 or 5 years. I have never until this year earned over $100,000, and most of my time was spent making anywhere from about 60,000 to about 85,000. I'm here to show you that you can quickly build wealth without making tons of money. And on this channel, Recycle Your Money, I'm going to show you how you can take $1 and make it work for you over and over again through assets, leverage, and using debt the right way. If you are tired of the slow path and want a system that actually scales, you're in the right place. There's a strategy called buy, borrow, die. And essentially what that strategy is where you buy assets, you borrow against them to buy more assets and to fund your lifestyle, and then you don't ever pay taxes, you never sell, and then you die with whatever debt is remaining, and you pass on those assets at a stepped up tax basis to your heirs, and they pay less money in taxes, sometimes even zero, in comparison to if you were to sell and you were to liquidate your portfolio and pay long-term or short-term capital gains. So let's get started. I'm going to give you a brief summary of my background. I, at 25 years old, started, like I said, with no net worth. I had a car that was maybe not paid off, and I had maybe $10,000, $12,000 in the bank. And when you went ahead and added up all of my assets and debt, I ended up with $0. And I thought saving was the best way to do things. And if you're a saver, I have great news, because this strategy can work very well for you. I find that savers often are the easiest to teach how to use the buy, borrow, die strategy. So back in 2022, I started with $20,000, just had cash sitting around. So I guess to dive a little deeper into the story here before I get started would be when I was 25, I read a book called Rich Dad, Poor Dad, and that book changed the way I think about money. So I started to realize from that book that assets are things that put money in my pocket, and liabilities are things that take money out of my pocket. So a car would be a liability. An asset would be stocks, a house, like a rental property, and maybe even Bitcoin, which I won't talk about too much, especially at this time. So at that time, I was dollar cost averaging, and I was just buying into stocks. I was buying real estate if I was able to. And by the time I was 29 years old, I just had done what everybody else does. I maybe bought the S&P, dabbled in some individual stocks, and I maybe had a net worth of about like 150,000 by the time I was 29 years old. So pretty slow growth. I had another pivotal moment where I saw an Instagram reel from Damon from Shark Tank, where he talked about how rich people will borrow against their assets, never sell their assets, and buy more assets. This changed my life. I now realized that I never had to sell another share of stocks. If I didn't want to sell real estate, I never had to. And I could continue to just buy assets as quickly as possible, and I could grow much faster. The problem when you sell shares, there's a few problems. One would be that you pay taxes, whether it's long-term capital gains or short-term capital gains if you held the asset less than a year. This can really erode your wealth. In addition to that, the asset is no longer working for you. Whereas if you use the buy, borrow, die strategy, your wealth grows forever, and you get to keep compounding forever. You get dividends when you hold long-term instead of being a short-term trader. And I guess now we can dive into my strategy here of when I was younger. So in 2022, about, 2025, end of 2025. So we're looking at about 4 years. There was a big bear market, and it started right around the time I started using margin and learning about this strategy. So what had happened was I saw that reel from Damon. I got started in M1 Finance because there was a 2% interest rate at the time. So it was basically free money. Whatever difference between 2% and however much I got in gains, I got to keep the spread, which is enormous, especially considering some of the things I buy, they return like 15, 17% on average over long periods of time too, mind you. So in 2022, I bought with the cash I had sitting around, I had about $20,000. And then what I did was I borrowed money from my paid off car. Not many people know this, but if your car is paid off, the bank treats it like an asset. You can borrow from it. So I went to the bank, and interest rates, mind you, were 2%. I borrowed $18,000 from my paid off car, and I bought more shares. I used all of that money and bought shares pretty much immediately. And I did so because there was a dip in the market of like 7%. So essentially, I bought the top of the bear market. And what I did then was over the next couple weeks, so you can see here it goes from like February 4th or January 20th when I started up until maybe March 18th when I had used margin to buy more shares. I made the mistake of blowing my load too early. I bought too much too fast and used up all my opportunity with my car and my margin to buy as much as I could as fast as possible. And then through the rest of the year, it stayed pretty steady as I kept buying with the money that came in through paychecks, through rents, things like that. So here, this is my total portfolio value. You can get a different perspective on things. So you can see at the beginning here, I dumped in my car, the cash I had, and then I started to use margin to quickly get up to about $100,000. This is how you can quickly build a portfolio that's meaningful. And then what I did was, yes, if we were to look at the charts, which I guess we could do real quick, is let's just look at the S&P 500. And let's go back to 2022. So that was a pretty significant bear market. At the time, it had been down maybe 20, 25% for the whole year. And then it started to go back up like 2023. It started to go up quite a bit. So at the top, it was about 436 per share. And at the bottom, it was about 328 per share, which is a pretty significant drop. So my portfolio, though, stayed pretty steady. And the reason was because I kept adding money to it with money coming in. So maybe $1,000 here, every couple of weeks, $1,000 to just buy, because I knew when the market came up, my portfolio would rip into the future, just skyrocket my gains, which it did. So you can see around 2023, it had started to grow very, very quickly in comparison to 2022. And then sometimes there would be a big influx of cash. So that would be like right here, where it just jumps up. And the reason was because I had owned a primary residence where I had about $30,000 in equity. I had sold that primary residence to move to a new house. What I did was I put all of that money into stocks and I borrowed back from those stocks for my down payment for the new house. And then I just kept sticking to my strategy, which was buying more shares and paying down the margin that I had to get to a safe percentage of margin health. You want to keep a safe percentage for your margin health, which we'll talk about either in future videos or pretty soon here. Because as most of you know, margin can be a little bit dangerous if you don't know what you're doing. And you can actually lose money if you don't know what you're doing. I would never recommend doing things like day trading, like buying cryptocurrencies with margin. I would never buy covered calls with margin. Just your upside is so limited for these things versus really what you want is some growth stocks, which in future videos we'll talk about some good growth stocks, or not even stocks, some good growth ETFs is what I would use. I would never buy individual stocks with margin either, because if a CEO does something crazy like Elon Musk did, where he hops on a podcast and smokes weed and the stock drops 10% overnight, you could put yourself in a pretty sticky situation where you lose a lot of value really quickly because you're levered up, and that value, it's a dual-edged sword. It goes up faster, but it also goes down faster when you borrow money because you own more shares. So in 2024, there was a bit of a dip. Maybe I had borrowed some money because I had a rental where I had to fix some things up. And then I just stuck to the strategy. I just bought. And then in 2025, it's very interesting too, because the tariffs, I want to say that was around February, right around here, is you had seen how impactful Donald Trump going on the news and talking about tariffs every couple days was. It just destroyed the stock market gains for day traders. And it makes it so hard to make money for day traders during times like this. And you just miss out on so much opportunity that you can get when you're a long-term margin play. So What I had done was I'd bought like $100,000 worth with debt during that dip, and I had just kept buying it. Any money that came in, I would buy. So what that looked like in terms of my net worth, which was right over here. Let's take a look. So we go to around February, and you can see it does impact me. It does go down. And I'm just buying with everything I can, whether it's margin, whether it's cash coming in. And here there's a huge dip down. That's because I bought a truck. So I used margin and my car stopped working and I had to buy a truck. So I did that. And then I had some money come in. I got some real estate commissions, things like that. And I paid back some money as quick as I could. But then the market crash wasn't over still. So it went down a little more. And then I just kept buying and buying. And then here it just started to go up pretty quickly. And then I don't remember what happened around May 10th. Maybe I had to borrow money or something. But then I kept buying and buying and buying. And while the market went up, so essentially what I do is while the market's going down, I will borrow money to buy more shares quickly. Because imagine this 2022 and this 2025 tariff debacle where the price goes down quickly. If I were to just say I have an extra $1,000 a month and I'm just going to buy shares with the money I have coming in 12 months, I'll only invest $12,000. But if I borrow money from my portfolio, I invested $100,000 this year. You know how long it would take me to save $100,000 to invest? I would have missed the entire opportunity of that bear market and I would have missed all the future gains. My portfolio roared into the future, roared in gains after that. So in the last year, I'm up 30%. And if I would have just been buying with money that was coming in, just every single paycheck and not taking advantage of margin and the power of using money you haven't earned yet, I would have missed so much opportunity. And to look really quick at how much it costs, I'm only paying 5.4% interest. So I get to keep this spread. And that's only on the total balance of my margin. And that's accumulated daily and it's accrued daily. So if I pay this down, my payment actually goes down. So the whole 564,000, I'm not paying debt on that. I'm only paying debt on the 147,000. For a while, this was a little higher. It was around 200,000 and my payment was a bit higher. But as the Fed reduces rates, my rate will go down and my payment will go down and I get a bigger spread on that money. So I'm up 30 some percent right now, minus the 5.4% when the year is finished, based on this 147,000. That's just some rough back of the napkin math for you guys. That is the power of margin. That is the power of learning to use debt as a tool. That is the power of learning that you can use your paid off car to buy more shares quickly. Most people, they're going to go to the bank and they're going to borrow money to buy a new car. You need to learn to think differently and you need to use debt as a tool that works for you and not against you. Of course, none of this is financial advice or legal advice. This is only for educational purposes and it's to show you my experience with debt and how you can use it to quickly grow. Like I talked before too, you got to be careful with your margin. You got to keep a safe margin health. I'm at 65% right now. If any of you guys get below like 40% or 30%, that should be kind of a red flag that you need to get that up. And there's some ways you can get that up. Like the easiest way would just be to use cash to invest in here. And that's easier said than done when you're starting out. But once you get into a couple $100,000 portfolio, millions of dollars in debt, or $1 million portfolio, 2 million, 3 million, it's a lot harder to pay that money back quickly. And you have to be a little more creative, which I'll teach you guys in some future videos here. I hope you got a lot of value out of this. Subscribe, comment, share, like, and I will see you in just a couple days here with some more content. And we're going to go over what I buy, why I buy it, what I use to anchor my portfolio. See you soon.